Alright everyone, Cowboy Trades here, welcome back to the channel for a quick update on the market. So what happened today? Solana crashed about 22%, Bitcoin down about 13%, even the S&P 500 had a breakdown of about 1% as implied volatility rises to the upside. Let's talk about everything that happened today. What were the catalysts behind today's breakdown? Should you be worried? Let's just break it all down. So starting off with some economic data we had coming in today. Job opening and labor turnover summary. Basically what you need to know, job openings were down, job hires were down, and in the next couple of days, we have the United States unemployment rate coming out. That's going to be coming out over on Friday. We're currently sitting at a 3.7% unemployment rate. With the recent data that we've got coming in for the labor market, it could suggest that financial conditions, labor market conditions are going to continue to tighten. Unemployment rate could go up, so some slight negative economic data coming in today. In terms of the rest of the news for today, we had the Fed minutes come out. I could go through all of the quotes, but the summary is what the Fed has been saying for the past year or so now. We're probably going to hold rates higher for longer. The Nasdaq was also meeting with the SEC today to discuss spot Bitcoin ETFs. So once again, we're kind of waiting. This is the week where all of the Bitcoin permabulls have been promising us 100% chance or 99.99% chance. That's what all of the perma crypto bulls over on Twitter have been saying. We are 100% going to see a ETF approval for Bitcoin on spot by the end of this trading week, which is going to be Friday for the SEC, which means we've got about 48 hours to see if we are going to get that ETF application come through. Now, because of all of this news, economic data, and also just looking at how overextended the S&P 500 is, it's not surprising to see that we saw implied volatility and the volatility for the S&P 500 take a rise today, up about 6%. I would like to highlight two things. Number one, we are still making lower lows and lower highs over on the VIX. Number two, we are currently retesting this previous support box as resistance. We've been doing this for quite some time. This doesn't mean that we have to turn around at this very moment. If you do want to look down at the bottom of the screen and notice the stochastic RSI over on the VIX, this is one topic we talked about. I believe this was in yesterday's video when we were talking about what's happening in the VIX and the S&P 500. The VIX looks like it wants to move up at least for the next couple of days or so. Stochastic on the weekly looks like it's got room to push up to the upside. And in terms of the S&P 500, like we talked about in the previous video, the S&P 500 has been forming this rising wedge pattern. We had another rising wedge pattern between, around about 4,600, and it moved all the way back down to the, 4,100 level earlier on in last year. We have just formed the same pattern. It's a slightly miniature one. We've come up to the S&P 500's previous all-time highs, and it doesn't look like the spot S&P 500, the S&P 500 futures, the ES1 managed to hit new all-time highs. However, in terms of the actual SPX, the actual S&P 500 didn't manage to make all-time highs. We came up, retested this level following the rising wedge, and we had a break back down to the downside. Considering how on the weekly time frame we're looking at the stock, like we talked about yesterday, it's very likely that the S&P 500 has a significant correction over the next couple of weeks or so. This also ties in with the VIX, which is inverse to the S&P 500. If we simply invert the scale over on the VIX, look at the VIX stochastic RSI and notice this is all the way at the bottom. Look at the S&P 500 stochastic RSI, this is all the way at the top. So if we're looking at the inverse VIX and the S&P 500, these move in tandem. In terms of the inverse VIX, stochastic RSI is all the way at the top. In terms of the S&P 500, stochastic RSI on the weekly is all the way at the top. So I'm, once again expecting VIX is probably going to have a slight melt up for the next couple of days, weeks or so. S&P 500 probably going to have a significant retracement over the next couple of days or weeks or so. If we remove this line over here on the VIX, the major levels that I'd be looking at would be between 4,400 down to around about 4,300, meaning the S&P 500 over the next couple of weeks could have about a 6.5 to 8% retracement back down to the downside, especially if we do have higher rates for longer and poor economic data coming in on Friday. We'll keep you up to date with that. In terms of the DXY as well, same kind of thing we're seeing with the VIX. The only difference is if we're looking at the stochastic RSI on the DXY, it's looking like it wants to move up. So we saw a move to the upside in the dollar today, which also led to, kind of adding to the fuel for the fire of why crypto was down today. If we are zooming out over on the DXY, you can see once again we are still holding this major level over on the DXY. This was resistance in 2015, resistance in 2016, resistance in 2017, resistance in 2020, and we flipped above this in 2022, and we've been back testing this in 2022, 2023, and just now we've retested this box one more time with a higher low from the low that was placed in on the 17th of June 2023, when we did come down and retest the 618 Fibonacci over on the DXY. We had a move back up to the upside, and right now, today, this week, the DXY came down, retested this box, and is moving back up to the upside. So this would lead to believe that the DXY is currently bullish. At least in the short to mid-term, the S&P 500 is looking like I said, it wants a significant correction to the downside. And we talked about the fact that this doesn't necessarily have to bleed into Bitcoin. If the S&P 500 crashes for weeks and weeks and weeks at a time, Bitcoin may just crash for a week or so. It may just have already bottomed out at this moment in time, and we may be getting ready to hold support. So what I'd be looking at right now over on Bitcoin, I would be slightly cautious on the weekly time frame. Stochastic on the weekly looks like it wants to turn down. There have been many times where if you are in some type of a bullish stance, you can see you have these super bearish wicks to the downside on the weekly time frame, and you'd be thinking with the stock starting to break down bearish that that's the end of it, and then Bitcoin starts to move back up to the upside if it holds these significant levels. So what I'd be looking at is this kind of bullish pennant pattern. I'd keep your eyes on round about 4,240. As you know, I'm not necessarily the biggest fan of trend lines. What I've really been focusing on and keeping my eyes on in trading more recently rather than trend lines is like order blocks and horizontal levels of support and resistance, and kind of just making sure that the markets are moving in some certain way, making sure we're making either higher lows or higher highs. Now, as you can see to the upside, boom, we've got these higher highs formed over here. While this is an SFP, we did fail the breakout to the upside. This is still a higher high, so I'd be keeping your eyes on this level right down here as well, 4,600. Of course, a lot of people are going to have their eyes on 42,360. If we lose this, you'd really wanting to behold this level down here, round about 40,000 or so. Interestingly enough, today, following Bitcoin's 13% crash to the downside, we did come down and fill this CME gap that was formed this Monday. This was a very quick CME gap. We boosted to the upside. Following this inflow of institutional money into the Bitcoin ecosystem, we came down, filled the CME gap to the downside. Once again, this kind of ties in with this level here. Round about 40,000 is really where you want to see Bitcoin holding to kind of ensure that we're still seeing higher lows and higher highs in the macro. Now, interestingly enough, there's a CME gap down here that should be filled at some point in time at 39,360. So that would kind of be the last level in the sand. You can also see, major wicks up here. So in a worst case scenario where we're still remaining macro bullish, I'd like to see this level hold before pushing back up to the upside. These are just the levels that I'm looking at. If we are coming over to the Bitcoin chart that we have been talking about on the channel, once again, not the biggest fan of trend lines. However, I do keep my eyes on these macro and very important ones which have significant touch points. Now, you can see basically what we talked about before on the channel. We were expecting a little bit of a push up to the upside. This was kind of an arbitrary number up here, but we were looking round about the 48,618. We came up to about 37,300 over on the futures market. We almost hit this level. We came back down to the downside. We previously talked about holding this trend line. Today, we came right down and we hit this trend line of support before pushing back up to the upside. So once again, round about this 40,000 level, you definitely want to see this level hold. If we dip a little bit below it and fill the CME gap, have a large wick to the upside, so be it. This is still kind of my base case scenario. If we do zoom out on the weekly time frame for the CME Bitcoin chart, once again, I'm kind of looking at these levels. I'd be thinking that Bitcoin could come up and fill the CME gap at 54,000 before coming back down to the downside. In terms of Solana, like we said, we saw a more significant correction today. We saw a 22% correction from peak to trough. So what was this really about? Well, recently we've been seeing very high funding fees for cryptocurrencies. In fact, we've been seeing the highest funding fees playing out in the markets for the past year or so. This massive spike in funding fees. We're looking at the one for Bitcoin right now. I don't want to overwhelm you with charts. It's pretty much the same on Solana. Right now, funding fees for cryptocurrencies are exploding through the roof, meaning that longs are getting very euphoric. And there was a massive long deleveraging which happened today in both Bitcoin and Solana. First of all, if we're looking at Solana, you can see it started off with a long cascade. About 2.5 million Solana got deleveraged from the market when we came down to about $100. Now you can see there's significant levels of support at $102, there's significant levels of support at $100, and there's significant levels at $97. I imagine a lot of people who were longing Solana, Solana is very well known for its degenerative community despite its massive market cap. There is an insane amount of leverage that goes on in this ecosystem. That's one of the reasons why the price has been managed to push up so high so quickly. There's a lot of longs in the market right now for both Bitcoin and Solana. A healthy deleveraging happened in both of these ecosystems today for Bitcoin and Solana. When we finally came down to around about this $100 region, 2.5 million worth of hourly liquidations quickly became 20.25 million of liquidations, totaling about 23 million worth of liquidations in a span of 120 minutes or 2 hours or so. So this is why we saw Solana take a massive run back down to $83. That moment in time, a lot of longs were liquidated from the market. A lot of degenerative trading was taken out of the ecosystem. We saw a massive amount of sell volume came in for Solana, and then we also saw, buyers come back in and take control of the market, moving Solana from about $85 back up to the $100 US mark. So this is really what was going on in Solana today. We actually previously talked about two different price targets for Solana. Target 1 was holding $100. We said if you don't hold this, keep your eyes on this 618 down here at $87.50, potentially coming down to as low as $83 where this trend line is. And that is exactly where we came down to today. That's exactly where we bounced from. And now we are sitting around about the $100 region for Solana. So my base case for Solana is pretty unchanged. Our original thesis of this being a bump and run pattern, it doesn't really look like it's going to play out anymore unless you're looking at a bump that's going to be like this. So I'm just going to remove this. This is the main trend line that we're still focusing on this moment in time. I would be still expecting for Solana to make one more high before we are going to be witnessing a macro correction. The daily time frame for Solana is completely reset. I think there's a lot of room for this to move to the upside. Like I say though, really all eyes are on Bitcoin right now because, believe it or not, a lot of the indicators for Bitcoin are more overextended than they are for Solana. So you would want to see Bitcoin hold round about this 40,000 level, and basically that's that. That's what happened today, guys. We had some economic data come into the markets. There's a lot of anticipation around the Fed minutes. There was lots of talk of the Fed today tying the Fed in with Bitcoin. People are still waiting for the SEC to approve the Bitcoin ETF this week. Time is running short. We've got 48 hours. I think the markets are going to be disappointed. You know my thoughts on this, guys. I don't think it's going to get approved this week. I think it's going to take a little bit of extra time. If Bitcoin doesn't like that, once again, you want to keep your eyes on 40,000. That is the level to keep your eyes on. So really today, a little bit of bearish news, a little bit of a systematic reset over on the volatility index for the S&P 500, and a natural correction in the SPX, followed by a rally in the DXY, is really what led to a slight correction in Bitcoin, judging by the amount of leverage that is in the cryptocurrency markets right now. This is why we saw the major correction. It was a deleveraging of a lot of long positions. You can currently see, if we're looking at the Bitcoin liquidation map, a lot of long liquidations were taken today. So at this moment in time, a lot, if this red box over here was much higher, putting it in layman's terms, then it would mean there's a lot of longs in the market. This was previously how it was yesterday. A lot of these longs got deleveraged. There's now more shorts in the market. Funding fees are still very high right now. I think we need to see a little bit more of a correction in funding fees so we're not so overextended. But this was really some systematic deleveragings of the markets taking place today. Nothing too special. Some systematic resets in the VIX, S&P 500, DXY, economic data tied in with a slight correction for crypto, paired with insane amounts of leverage in the market, is why we saw these corrections today. So you know my levels, you know what happened. For today, my friends, that's all I've got. If you're enjoying the consistency, if you're enjoying the updates, be sure to let me know down below. It's been your boy Cowboy Trades. Smash the like button, smash the comment button. If you want to further support the channel, feel free to click the join button, become a member today. Follow me over on Twitter at 618_cowboy. See you soon. I'm out. Peace.